Okay, so welcome back to HXT 212, where we have unfiltered conversation with leaders, with builders and thinkers, shaping what comes next in the hospitality and of course beyond. Today's episode is about the tension that exists in almost every hotel, but is rarely discussed openly. The hotel team looks at occupancy, ADR, RevPAR, guest satisfaction, brand standard, like all the neat and gritty of operation. But the owner sometimes look at something totally different, like the cash flow, the risk, the debt, the CapEx, contract structure, asset value, and exit strategy. Quite a lot of fancy words that we're going to cover today as well. And sometimes both sides are looking at the same hotel but seeing two completely different realities. So today my guest is Philipp Huterer, Managing Director of MRP Hotels. And Philipp works at the intersection of hotel operation, real estate, investment and asset management, as well as transaction and restructuring, and as well as revenue management. And at MRP Hotels, he focuses on asset management and all the operational and financial restructuring of hotel assets. And together with his team, he oversees a hotel asset portfolio valued at around 1.5 billion, if I'm not mistaken. So what makes this conversation interesting is that Philipp does not only look at hotels as places of hospitality, he looks at them as living assets, where every operational decision eventually connects back to value, risk and return, and long-term ownership strategy. So today I want to explore a simple but powerful question. What do hotel owners see that operators often don't? Okay. So Philipp, thank you so much for joining me and welcome to HXT 212.
Well, hello to everyone. Hello, Thibaut. Thanks for having me on this podcast. It's actually my third podcast and I'm really looking forward to it. And thanks for having me.
Thanks so much. And it's very warm today. So if you see us red or anything, it's because it's very warm today in Vienna. So I apologize. But my name is Thibaut Catala. I'm the founder of Catala Consulting and this is HXT 212.
HXT 212.
So, my first question, can a hotel be full, loved by guests, and still be a bad investment?
Well, absolutely. I believe I even have a current example we are working on. It's a property in Vienna. Unfortunately, I can't name it.
Yes.
But it was bought from, in terms of due diligence, for actually a wrong reason, or the analysis was done badly. Mm-hmm. I believe, especially like when you look at hotel assets, you have to really look at from different angles. It's actually like a MICE hotel, like with a very deep and strong MICE share. And it was bought by the investor with the hope to extend this MICE capacity. And it's really loved by guests because due to its generous rooms and also the facility, it's actually from the layout, it's a perfect MICE hotel, literally. It's even a branded one with one of the big brands, to name them all, Marriott, Hilton, Hyatt, etc. But the problem was that from the location, the business case was not really scalable because it was actually in the outskirts of Vienna. And so from an investment perspective, actually the case was to exchange the operator, bring in a new operator and a new brand, and then scale up the case and basically lift up the rent. But unfortunately, although loved by guests, because if you look at the TripAdvisor recordings and remarks, it's like a AAA rated hotel. Yeah. But we could not, or the investor could not scale up the case simply due to its location. So yeah, there you had the trap. And we're speaking really about a long period of investment. So not the classical IRR case, flip it in 2 years. So the investment period was like over 7-8 years. Okay. But although even ADR wise, it was not able to scale it up. We are still centering around the ADR level about 100 euros, but inflation really catches up. And this was the classical case, just from an outside perspective, and from TripAdvisor ratings, a perfect hotel, also from the layout and modern build, but due to its location, absolutely a bad investment case. Yeah. So
I see this as well happening sometime where, like in the news, saying like, oh, this hotel was great, it was full, revenue was great, and so on, but you still had to close. And we feel that okay, there is a side of the hotel that we don't see, such as investment, such as a debt that sometimes owner cannot repay. And then the banks step in and so on. So yeah, that's all of this. But you see, like the front face of a hotel, even if it's successful, it doesn't mean that the hotel is still successful. You know what I mean? Can you comment on that?
Yeah, absolutely. I actually have a recent example. We were working. I can officially know it because it was in the newspaper. Anyhow, we were working together with Art Invest at the 25 Hours Hotel in Vienna, which was recently transacted last autumn, and there was also the business case that, or the classic example that right from it's a hotel that performs really well, and it's really well known in Vienna, and also TripAdvisor ratings very strongly. It was one of the first lifestyle hotels in Vienna. But from an operational perspective, like if you, for example, it's an asset that's where, for example, hallways are very narrow. It was not built as a classic hotel.
Yeah.
So from an operational perspective, you need way more kitchen staff because the kitchen is actually located. Freezers are one level below the kitchen, classic example. So you need at least 2 more kitchen staff to be able to move the things up into the main kitchen, which makes operation way more costly.
Yeah.
But if you just see it from the outside, you will think, great asset, SDR set performs really well, but cost-wise, the operator has let's say a bigger burden with this asset, and that directly reflects also the potential rent that the asset can deliver.
I see. No, that's fascinating. And so, and to come back to your profile, can you give us a bit of introduction on who you are and what you guys are doing?
Yeah, absolutely. We are an Austrian-based hotel consulting firm, or actually we would say, we like to say a hotel real estate consultancy firm with a specialization on hotel real estate.
Yeah.
And we are based in Vienna, Austria, and also in Berlin. Okay. Around 15 staff. And we focus basically on the consultancy of the entire hotel real estate life cycle. So really from the first analysis where I should basically purchase a hotel. Then we focus also on asset management, or we love to call it actually performance management, because we administer and manage a lot of HMAs. And then another pillar is classical revenue management, where actually third-party operators would come to us, smaller family office that own a couple of hotels. And so we also do the direct revenue, day-to-day revenue management for these clients. And then we are also very strong in commercial consulting, where it goes, where we focus on basically hotel lease contracts, and also on exchanging operators and finding new operators and basically focus on operator selection. And so we feel very, very confident with hotels, really from the start to the exit.
Excellent. So yeah, in a way, we are a bit competitor on the revenue management side.
I would say so, yes.
So
maybe I learned.
That's the end of this episode. No, all good. I think there's still just to talk about revenue management. I still believe revenue management is so underused, and so many hotels that don't do any revenue management. So I believe there's space even for new players, even more players than there is today, because that's something which needs to be developed more and more.
Yeah, absolutely. I always exchange myself with my colleagues that lead the revenue management team. And even with small twists, just drawing up a classical rate sheet, doing proper business on the books management, having a pace report. So really you're more in depth into revenue management than even I'm. But these are these small tweaks within, I would even say within a week of working, you already see results because compared to the costs, the top line can be pushed very, very fast and easily. Yeah. And
without change on CapEx, without change of big investment, except
absolutely
revenue management fees. But it's we saw some increase quite big. Yeah.
Absolutely, and even we focus. Usually, if you read in the newspaper or read some articles, it very often focus on city center hotels or urban spaces. But we must not forget, like in France, in Austria, and Germany, you have such a wide variety of local hotel-run hotels with 50, 60, 70 rooms, and you would be surprised how much revenue they do, and they still work with an Excel spreadsheet.
Ooh, I have so many stories on this. Like when more recently, I asked an independent hotel owner to show me to give me access to the PMS, and he sent me a shared Google calendar. He was doing all the check-in, check-out on Google Calendar. nowadays. Can you imagine?
Amazing.
But it's still the case today. I'm still surprised and I'm amazed by this. But again, it's not a question of or they're stupid or not. It's a question that they don't know what they don't know. And they've never been exposed to hotel tech or never been exposed to revenue management. So they don't know that they could do things differently. You see what I mean?
Absolutely. And very often we recently had a customer in Tyrol area, very beautifully run, I would say, boutique apart hotel, but really on the luxury side.
Yeah.
And really doing like around €500,000 in EBITDA.
Okay.
So we're really speaking, and this with 20 rooms.
Strong
so
one. Yeah.
very, very strong. But the owner's main basically concern was he's faced on an everyday basis with so many different systems that they are almost at this point where they are overwhelmed and where they're not even using their systems correctly due to the lack of time, because you we touched on this before. You are faced on a day-to-day with checking in guests. You are must care about your accounting. You have a debate with your chef in the kitchen, and then you must besides do revenue management. And there, where you have companies like you, for example, where even an outsourced solution is then the better fit, because then you can really focus on the matter.
That's interesting as well perspective. But when an owner and an operator walk into the same hotel, so that's the very same hotel, what do you think they see differently?
Well, I would say quite a lot, because even I would start with personality-wise, usually like the investor type and also the operator type are completely controversial personality, also from the perspective, because usually the owner type or the investor not only owns hotel, but has other, maybe invested in an ETF, maybe invested in other asset classes as well.
Are you saying they're dressing differently and so on?
I have to be careful what I'm saying here, but I would even say, yes, it's just a different type of personality. And this is a bit of the beauty of also industry. It brings so many different types together. And I think it's still a people business. Okay. So you have to understand also your counterpart. So yes, the perspective is quite different. I would even dare to say that the owner or the investor type doesn't really see the hotel as a whole. It really is like from a pure investment angle, and the operator really walks in and sees how are the runways, where might be operational challenges, and the investor already thinks about what yield or what return would I be able to basically to realize on it. So it's this investment angle and the operational angle. They see completely different.
It's true. But you see as well, it can be, and that's an open question, huh? Do you see it as well maybe as a risk where investors and manage hotels as kind of an investment on the stock market, while actually hotels are people business? You know what I mean? Because sometimes you may have investors who are just looking at the figures, at the numbers, like they are looking at the screen on the stock market. While actually hotels are run by people with guests and so on. So you see, it's a people business, not things. So you see, there can be a bit of balance here.
Absolutely, I would even argue, and this is a very hot debate, and I think it has emerged over the last years, that investors, banks, stakeholders have to be way more educated about operations, because yes, it's absolutely true. You always say, like in Austrian you say Lage, or location. Completely true. But there's a second pillar that emerges, and this is really, we have to do with an operating entity that works with serves the restaurant, checks in and checks out people, cleans the rooms. It's an operations heavy. Even in a limited service, you have a lot of service, and we have to understand that a maximum rent potential is defined how efficient this operation is. And this is the second side, or this is the second page behind this profit and loss statement, what the investor is analyzing. And you have to understand what the operator is doing. You really have to be educated about operations, about revenue management. Just to give you an example, you really have to understand also what the guest segments are, where are the guests coming, how the MICE capacity is utilized, how the packages are created. Even if you have a revenue share or a hybrid share lease, understand what your operator is doing with the breakfast splitting. So if I, in a nutshell, basically, investors have to get way more educated about operational matters than in the last 10 years.
That's true. A few years ago, I had this discussion with some owners, and they were saying like, oh, last month you did 25% GOP. You were supposed to do a 30% GOP, so you can remove 5% of your payroll, and you will go up to 30% GOP. And I was like, yeah, actually no, it's a people business, and if you remove the people, you may not do the performance as you had. So you see, but for them it's just like a mathematic thing. Well, in hotels, it's not only mathematic. There's like people behind, there's the satisfaction, guest satisfaction, the employee satisfaction, even if I dare to say so. But you see what I mean? There's a lot of interconnection that I believe where education of ownership as well is important.
Absolutely. I mean, let me quickly explore this a bit more in depth. We recently were working on a transaction. It was actually together with also a broker partner. We worked with CBRE together, and we had one investors. And usually a transaction goes over 6, 8, 9 months, very long period. And the funny thing is, the hotel then in May, June was last year bad numbers, and the investor, a really professional institutional investor, said, no, we cannot continue this transaction because now we had 2 or 3 bad months compared to the market. And we were then arguing, okay, fully understand, but we're speaking about a 25-year investments plus 2 times 5 years extension period. And we now have like we are leveling off or have a little dispute during a period over 2 months. A group might have cancelled, There are so minute details that cause a bad month. And this is a bit the problem, that you cannot assess how successful a hotel is over a period of a couple of months. It's determined over a couple of year basis, and also the operational team needs to be given some time that the changes are effective. And
that's super interesting. And would you say that for different assets and different properties, you will recommend different owner as well? Because, for example, like you have hedge fund which want very quick money on a very short period of time. You have more long-term investors, and you have more maybe like independent. So you will say like you will guide different ownership to different structure?
I think in reality it's a bit more complex than this, but from a simplified perspective, I would argue currently, if you speak about Central Europe, because also markets are different, I'd say, like, especially when you speak ultra luxury, about properties like a Park Hyatt, a Mandarin, a Rosewood, for example, brands like this, an Oetker collection, where usually if it's not a distressed deal due to some reason, like a high net worth individual with a long investment horizon is more suitable to these ultra luxury properties, because from a also cash flow and IRR perspective, it's very hard to make an IRR plus 15% with a luxury property, very CapEx heavy over a 3-year period, because markets are, Paris, for example, Vienna, if you look at ultra luxury, it's already very saturated market. Whereas if you look at, for example, boutique hotels or office conversion in the right locations, there you can still do the classic flip deals where the PE money comes in, where you have some distressed or some really value add components, where I would say like the PE guys would be happy to purchase. And then you have the classical, I would say also merge and acquisitions of entire operator vehicles. I think this is also, I wouldn't say it's an asset class coming in, but it's another investment perspective comes in, that it's now very attractive, I would say, for large PE funds, because you get the volume simply. If you purchase an operator, you scale it. I think this is a very, very interesting perspective currently, because the operator market is consolidating at the moment. And we have a very in-depth, I would say, knowledge, because we do a lot of operator selections. So very close with a lot of operators. And I believe that some operators, without naming any, will fold in the next years. And there will be some consolidation opportunities.
Okay. First, you have to you have to clarify as well the kind of the language that you have in investment, like PE. For audience, sometimes you have to make it a bit more clear.
Absolutely, yeah.
So PE?
Private equity.
Thank you.
Sorry for. Yeah.
So yeah, but no, I think it's very interesting, and you see as well a trend of a white label operator coming in.
I would say not really new operators coming in, but
Yeah.
operators consolidating, like
Yeah.
bigger ones eating up, so to say,
Okay.
smaller ones, because a lot of operators have grown with, I would say, even loss of control, so
Yeah.
to say. So scaling is important, that you're not eaten up, but the processes that you need operationally,
Yeah.
like proper revenue management, proper human resource management, have not grown with the pace how they have grown.
Yeah.
And this causes now a lot of operational inefficiencies. And you think about that, inflation has now boosted over the last couple of years almost 20%.
Yeah.
Leases have risen, operational costs have soared. I mean, it's a simple Excel spreadsheet where you can calculate that operator margins. So EBITDA margins have really vanished, and a lot of operators are fighting for survival. It sounds very drastic, but it's a drastic world we currently live in.
That's interesting. And but again, do you see like sometime when you have an owner in front of you, and they are deciding between going to a big brand or going to a white label operator to manage the assets, where you will guide them? Or do you see like the brand are still very strong on this, or do you see like the white label could be a good alternative?
Yeah, thank you. Thibaut, it's a very good question, because I think it's especially this I would say fifth wheel on the car is with the franchisors, the big brands, is a very hot debate at the moment. A lot of clients are faced with this question, because it really depends, and I believe it depends on the strength of the operator, and especially it depends on the location of the hotel. I'm personally convinced, if I have a well-located city hotel with a strong, might even be a very local operator that has a professional revenue management, and it's a well-known city, I dare to say that the fees the brand charges, this 8-9% of total revenues, is very costly, and it will not deliver you this excess demand and this excess rate potential. But whereas if you are, for example, located at a classical airport hub, for example, where you need the brand, or you're at like I would even say we are basically consulting one hotel close to Tegernsee location, close to Munich, where the American market is very strong, and a lot of basically Hilton Marriott owners or membership loyalty customers would use their points, for example, in this hotel close to Munich. There, the brand is a very big value and asset. So I think it really depends, and you have to look at by asset. It's very hard to generalize.
I find it fun. First of all, I have to say that the brand can be very strong for distribution and for the loyalty scheme, something which we cannot compete yet. But I feel as well on the operation, like revenue management, HR, and so on. I see some operator, like smaller operator, or like like asset manager and so on, which are ex big brands, and they do this for a fraction of the cost of the big brand. So you can replicate those kind of corporate branded management at a fraction of the cost by going into a white label operator, for example. So I think that's a trend which is coming. The only part which I see where the brands are still very valuable and very strong, that's on brand recognition and loyalty scheme behind and distribution.
I fully agree. Especially like we have to be also a bit careful, because also a lot of white operators use also the revenue management services also of the big brands, and then when you have one revenue manager revenue managing multi properties, you really have to make sure, also an operator or also as an owner, that you also receive the best service and the right service, and that your it's always like in kindergarten to say the kid that screams the loudest gets the most attention, and we see this phenomenon literally also in professional services provided by brands. Yeah,
it's very true. So if for anyone listening, if you have a brand, scream the loudest. So if you want to be taken care of by the brand, that's what you're saying. But actually, it's right.
Yeah.
It's the same with anything, any services. I feel when I'm not going to say this, if not, my clients are going to shout me. But it's true. Like sometimes when people are not delivering enough, you have to shout, you have to scream to be heard.
Yeah.
And
it's also, we are confronted with this phenomenon in our performance management mandates where you have HMAs, so the entire economic risk actually lies with the owner because it's his propco, it's his opco, and the brand is just managing the hotel. And in hotels that are basically struggling, it's basically the first asset management or performance management move to bring in the exec team from head office, to bring in the regional team, regional GM, to get the focus back on the asset. It's usually the initiative that drives the most or has the most immediate effect because the attention center is back. Without even touching revenue management, without even firing any employees, it's just bring the attention back to the asset. And this is one of our biggest challenges when we onboard a new asset.
Yeah, actually, it's a good segue because when you review an hotel investment case and when you onboard a new hotel, what are the fastest signs that the business plan is a fantasy?
The business plan is a fantasy. It's also a good question. Let me quickly think about it. I think I know the answer to this. It's we always the first thing we look at it. It's actually forecast accuracy from the past.
Okay.
Yeah, because that a budget is drawn up very fast. A 5-year plan is drawn up very fast. But have the past goals been reached? And I think this is the best indicator to benchmark against if the plan makes sense. And also we look at market developments, about peer groups, if what has the market done and how might the market continue and what is this hotel projecting. And it's really off. I mean, I'm not saying you can't outperform the market, but it's very hard to say you outperform the market by 20%. Yeah, this is highly unrealistic.
Because I feel sometimes like people who are valuing hotel and creating business plan and everything is great, and they're like projecting like they're selling the moon to ownership and to everyone, and then they make the deal and then they go and then they give the business plan to Thibaut and Thibaut said make it happen. They're like, what? What's going on? And most of the operators are in this position when they're like, who sold this? Who did this
fair point. Or another comment I might add is that really go a layer deeper. If you go department by department and your room's departmental profit goes from 65 to 70%, really ask, how are you going to achieve this goal? Why is the F&B departmental profit rising? Do you have a new concept? Do you have a new cost-cutting initiative? Are you doing things differently? So really go this level deeper and really challenge the actions behind the numbers.
We'll even go a step further. I agree with you. I would say like involve people on the hotel side and on the revenue management side as well for the market and analysis and the projection. That it shouldn't be a one-man show doing the valuation on this kind of thing. On the business plan, it should be like a common effort. And if it's built by other people who understand the business inside, I think that could be a bit more accurate.
Yeah, I agree 100%. Yeah,
that's an issue which I see for the last 15 years or more, where we have a crazy business plan and then in operation we struggle because sometimes it's a bit too fantasy. This way.
Absolutely, and I mean it's very nicely that we always do the budget once a year, and the owner is then happy. But I think the budget is one metric, but it really comes then down into professional asset or performance management. What is the 12 months rolling forecast doing? What is the I'd say the goals you set throughout the year doing, because the budget we always say is it's a one-time snapshot, and usually in March, April it has moved to the drawer, and then you really have to challenge the forecast, push the forecast, because the budget is done once per year. I'm not saying it's unimportant, absolutely not. It sets a certain goal, but very often in March, April the market has developed either positively or negatively, and then you have to adjust and reforecast and work throughout the year to either achieve the budget, or maybe there is still a lot of gas left in the tank, and you can way outperform the budget. And we've very often then worked also with a bit of a trick with actually two budgets, one owner budget, official one, also for banks and etc., and a second budget for employee bonuses, so that GM and local staff is not discouraged. And there's a lot of tweaks and I think also a strategy behind when to push what lever.
Okay. I didn't know about those two budgets. That's a good trick, but it shouldn't be that far, though. Eh?
No, absolutely not.
Be careful. Okay. No, but that's important. And another dimension here, which is important, is a CapEx, because I believe CapEx is also where dreams meet spreadsheet, where you have to as well make sense of renovation and so on. So how do you know if an investment creates value or just create a nicer hotel? And I will as well put some things in perspective, because I've heard this angle as well on defensive CapEx and offensive CapEx. Can you explain a bit more on this?
Yeah, absolutely. I mean, this is now the owner side basically investing into the hotel asset, and it would not go without it, because a hotel needs constant impulses. The market is constantly changing, and we had actually done a lot of projects where we used to joke, especially in Western Austria, where especially in the ski resorts and wellness resorts, we used to joke and say like the owners have the statement or the notion that at least once per year that the crane and the construction firm must be at the site and build something new. Okay. And this has been really actually a problem also for a lot of hotels, ineffective, not cash flow generating, badly ROI percentages, where you build, for example, another outdoor pool, another outdoor sauna, for example, not really generating any value. And this is also completely applicable to the urban hotels, to the professional Holiday Inn, to the professional Hilton Core Blue, where you need to make smart investments that pushes your ROI, and also most importantly supports operations. So we always say like an investment must do two things. It must either bring new business in or support operation into cost measures. Okay. So it's bottom line relevant, then it's a good investment. And yes.
And by your experience, what is the most successful CapEx that you will always recommend, where you have the strongest return?
The strongest return currently, if you think about classical business hotels, urban hotels, you think about markets like Vienna, is classical room renovation. Okay. Because we have actually done a regression analysis for a couple of years ago, what drives the most ROI, and it's directly linked to basically return levels. Yeah. It's obviously location of the hotel, it's a no-brainer. And then it was room size and quality of the room. Those three have the biggest effect on your ADR levels. And this needs to be constantly monitored and needs to be at least on the top CapEx list for investors. I'm not saying energy measures are not important, etc. Absolutely it is. Yeah. But there we have seen the most or the biggest direct effect.
I understand. Yeah, I was expecting you to say today a pool will be super important. That will be your stronger ROI.
An AC.
An AC and pool. Because it's currently like what, 36, like 34 or something like that?
Yeah, we're getting 40 degrees.
40 degrees, my God. Yeah. So a pool here could be a very good investment.
But AC, for example, would be apply for me to room renovation, quality of the room, a guest experience. Although even in a city hotel, you don't spend so much time in the room, but the guest still appreciates it.
Yeah, that's true. And as well, I see a trend and an issue nowadays with hotels. I see it happening in the mountain as well, in Switzerland or in Germany or in Austria, where owners, they don't invest in renovation or CapEx for a while. And then they say, okay, now I need to invest, I need to renovate to make much better. But you see, there is a tipping point where it's too late, maybe. You see what I mean? Instead of what you recommend, doing like a capex or doing like kind of renovation step by step or a bit every time, or wait until it's drawn out and then you can do a big one.
Yeah, I think you're touching a very nice topic. I would like to bring in also the topic of FF&E reserve,
Okay,
so
yeah.
furnitures, fixtures, and equipment, where the operator usually is basically two options, like an obligation to spend it every year, like 2-3% of total revenues, or save it up and invest it at a later stage. But this is for renewal of a sofa, for example, of curtains, whatever, so that the I would say a bit of the soft components in the room stay nicely. And this is a bit the dilemma, because if you have, like, for example, very often big institutional owners, very often the communication with the operator, because the asset manager is asset managing 30 properties, so they usually have a contact twice per year, and so I recommend to have, and this is a bit the dilemma, because you have a fixed lease contract in the DACH region, meaning you basically don't have so much involvement with your asset, basically receiving, like, you rented out an apartment, the classical rent, but to keep your product constantly up to date, but also supporting the operator of what she or he needs. And we always recommend to have like a 5 and 10 year CapEx plan, but including the FF&E reserve, not spending it stupidly. And very often after 3-5 years, sit together and make a plan for the next 5 years. What amount of CapEx can be invested or expected by the investor, and how are we gonna to use the FF&E reserve? Okay. So that no funds are invested inefficiently. But I would, to answer your question, I would strongly recommend to constantly keep your product up to date, because we are living in such a fast-moving world where your product also gets assessed on a day-to-day basis. And once you have these bad reviews, it's hard to recover. Yeah,
it's true. And you think like some owners are postponing as well the necessary investment because financing is harder?
100% sure, or the exit comes closed.
Okay.
And then last years were very hard for the real estate industry. We hardly have seen any transaction. It's slowly picking up. But if you're an owner and you know you're gonna sell it in 2 or 3 years, why would you invest in CapEx? And this is a bit a dilemma. A lot of operators are somehow trapped, and then the transaction gets postponed, and suddenly out of 2 years it has been 5, 6, 7 years, and then you have the backlog.
Yeah, that's that can be, I understand as well, because you see like, okay, I'm not going to invest. But the issue is that you say like, I'm going to sell it in a few years, so I'm not going to invest, but then the sale never come.
Absolutely.
So then you're screwed. You know what I mean?
And we are taking the operator on such a short rope and are really hard to the operator. The operator must do this. The operator must do this. The reporting, etc. And I think also in a rental agreement or hybrid lease agreement, to name it, there should also be an obligation from the investor to invest.
Yeah.
Because as soon as we're speaking about CapEx investments, it's already voluntary, and then it becomes very vague. And I think it should be like a way more fair, because it's a relationship. It has to work from both sides.
Yeah, it's true. And same like we talk about this like this kind of relationship on both sides, but you think as well the hotel management agreement and the leases are still designed for the market we are in today?
No, they have a classical no. Leases and agreements have changed slightly, especially reporting obligations have grown. If you look at leases 10 years ago, the reporting obligation was like, even if it had a paragraph, it was very short, a few lines, and this has now grown because we need more transparency. The banks need more transparency. The stakeholder need more transparency. We need to know what's going on, basically. But I think there is so much room for improvement still. that I'd say we are still lagging behind. And also there is no real standard for leases.
Okay.
If I look at the last 10 commercial diligence we have done over the last 2 years, every contract is, I'd say, completely different.
Okay.
And I somehow feel, because so much investment is going into hotel transaction, there should be somehow, I don't want to say it regulation, but like a classical international template for leases that would make it way more transparent and way more easy for banks, stakeholders, and would somehow boost also the investment cycle.
Super interesting. Very similar to USALI for
absolutely.
For accounting.
There you have it.
Yeah.
And somehow there you don't, which does not really make sense. Yeah.
For anyone listening, if you have a new business idea today,
or for any lawyers listening,
for any lawyers listening, there you go. But and same with the fees. Do you believe like the operator are rewarding enough on the profit and the performance?
Fees is another difficult topic, no matter if it's franchise or operator, etc. With fees, there is a bit, if I may touch on the franchise side again, very, very often, even in the franchise agreements, it's not clearly laid out what fees are charged. I mean, the base fees, obviously, yes, but then over the years, brands lay out completely different or introduce new fees somehow. And it gets very complicated, not really transparent. And owners have a very hard time, or we also as asset managers have a very hard time sorting out if the fee calculation is done correctly. And I think there needs to be a lot of catch up to be done also from the brand side to have a clear picture on this fee matter, especially the hidden fees. I mean, there you are really in depth with your revenue management team, and also we are. I mean, everyone focus on these big fees, base fee, incentive fee, but all about these cluster charges then, and etc. And 1 year it's booked under sales and marketing, then it's a bit of an A&G, then suddenly it's below GOP, and I think this is also not really responsible from brand side.
But do you think they do it on purpose? Do you think they do it on purpose to have a black box on this?
I think I don't want to accuse anyone, but at least from my experience, I'd say we could have easier times and an easier picture. And yeah, absolutely.
I'm sure on this podcast we may have someone else on the brand side on another episode that could defend himself or herself. Yeah. But I hear you. Like every year the fees it's the same fees or slightly higher or slightly lower, but change in different categories. And it seems like it's a bit on purpose to make it complex.
Very often it's not even the fee height or the amount. Yeah. Very often it's what is the actual service of the brand behind this fee. And this I would like to understand, what is actually the service I'm receiving.
That's interesting. And on the main fee, like linked to the performance, do you think it's better to link it to the GOP or the cash flow directly or the EBITDA? Where is the best performance here?
Yeah, I'd say so. I mean, for any incentive fee, as long as it involves also the cost management side, I think you can go direct to EBITDA or GOP. Yeah. I would stick to the GOP level because very often, depending on the structure the owner has, you have below GOP items where you are not operationally responsible for. Yeah. So I would still stick to GOP, but would also make sure that the GOP is calculated correctly, that USALI is correctly applied. Yeah. But if it's a performance bonus, it must involve the cost measurement because this is the topic we're speaking about, and this is moving the industry right now.
That's true. And I feel as well we need to have a way to share the risk between the owner and operator. Because I think so I will reframe the question. How should risk be shared between operator and owner?
Very good question. I think it's a bit of a tricky scenario at the moment because we live in this fixed lease or in this lease culture with a high fixed lease component. Okay. So this does not really enable somehow risk sharing because I'm leasing out my property. So it's a very hard general market condition. Yeah. I think the awareness of the market would have to change, and I believe that as especially EBITDA margin and also lease levels, the return levels. It doesn't matter if investor or operator side is, I don't want to say it's diminishing, but it's it's getting tough of their CapEx requirements, loan arrangement costs, financing condition, everything gets a bit tougher. So I still think that the hybrid component will or must gain in size. And this is basically also the answer to the question. And I believe that lease level can climb if you have, for example, a hybrid lease with also a component of a somehow profit share. Yeah. So, but then also the investor must gain more operational insight, because you're transcending from fixed lease to, you're not HMA right now, but you're somehow in the middle. But then operator needs to deliver, investor needs to gain more insight, and then you can somehow start to share a profit. But I would not recommend any of my clients to sign a profit share lease without having any insights, because this is still it can only be a catastrophe.
Makes sense. Yeah, definitely. And I made some research as well on MRP, and as well on some of your past interviews, and you argued on active asset management, which is becoming very critical. It's a success factor for hotel. And what does active asset management actually mean on a week on week?
Yeah, I mean, there again, it depends a bit if you go on are you in a fixed lease scenario or you are in an HMA scenario. I mean, it's relevant for both points, but especially in this HMA world, it's really, although some points already also apply to the fixed lease contract, is that you actively involve yourself with the asset. You actively manage it. So you have a strong relationship to your operator. You question the operator. You challenge the budgets. You also bring in new ideas that the operator might use. You basically confront the OpEx team every second week with new ideas. You make sub-business plan how to push the F&B performance. Should you renovate the rooms? Is CapEx spent correctly? So this is why we call it active asset management, really performance management, because you really try to squeeze out the last EBITDA margin of the asset, but under basically the umbrella or with respecting the operator, and also basically being a sparring partner with the operational team, because they are actually responsible for delivering the service, and this makes a difference from a successful to unsuccessful hotel. And this is what we call actually performance management.
I've seen different angles on the asset management. I've seen asset manager who are stepping in as kind of the police of ownership and so on, who are trying to squeeze, as you mentioned, the hotel team. And I've seen another angle where asset managers step in as a sparring partner, as part of the team, and trying to bounce some ideas and to do this. Both angles have different approach and different results. So you will be more on the second one, right?
Yeah, absolutely. I mean, let me give you an example. Is we were a long time doing the asset management also of the Anders Vienna Belvedere, that has now been sold to Deka and is now managed by MHP. But there we had some great initiatives also about because it's a MICE hotel, how to basically push or make the sales team more effective. And it was a Hyatt managed property, and we had a very great relationship with the Hyatt team. They were doing an amazing job, but we brought in still some ideas how other properties are basically doing their sales activities. So having basically at the same to split the sales team, to have one contracting team and one planning team, and those teams switch every 6 months. And they had prior to basically one team that were doing everything. This was a classic performance management idea, although a brand managed property, but we knew the Vienna market needs a bit of a different structure. And without the input from MRP here, I still believe the performance would not have been there if we have not restructured this team together with the local team.
So in the spirit of HXT 212, I wanted to ask you this question on what you see is next for hotel asset management and hotel investment over the next 5, 10, 20 years or more.
I think I will not surprise a lot of listeners with this, but it's the implementation of AI or integrating AI tools into your daily workspace, especially that the asset manager, the senior asset manager, gets way more time to spend actually time on site in the property. I think this is a very, very important part, and the analytics behind are just on steroids, so to say. I think this will be a drastic shift, that you actually get more time to spend as an asset manager with the OpEx team, and to because with the beauty of a hotel property is that you actually can step in it. You know, you need to observe things, you need to feel things, and I think you have then way more time to actually spend time in the property itself, and not behind the desk. And the behind the desk work will be supported by strong analytics tool, etc.
So you see in the next few years the future AI hotel asset manager, and the hotel being asset managed by an AI only?
I might think so. I'm thinking about small fixed income portfolios where you really think about call it easy properties, like for example an Ibis next to the motorway, etc., or airport hotel, etc., where a big part of the analytics or of the reporting, etc., or where the recommendation suggestions comes from an AI tool, and then it's fine-tuned by the asset manager. Absolutely believe so. And I believe that asset management will become also affordable for family-owned business, for smaller hotel chains, for smaller investment companies, and not just for the big institutional owners, for the big family offices. So it will bring also the price point down, because I won't then have a consultant spending 3, 4, 5 days per asset per month, because it will be maybe a flat fee solution that becomes simply more accessible.
I agree. Like, I see the AI element on asset management as an extension of the team, not as a replacement. And as well, it can help you brainstorm ideas, and can help you gather information, look at the insight and analytics. I think that can help a lot. I don't know. I'm just thinking out loud. Can you imagine, like, you're connecting to your board monthly review, and the hotel team connect, and then they connect in front of an avatar of an AI asset manager, and they discuss with the AI and so on. And then they report to the fund, which then you have human looking at the data. Can you imagine this world?
I think it will be the new normal, so to say. Yeah, absolutely. And I think it will be scary how much credibility we also give then that the AI solution. It's always like, I even have this I had a discussion actually last week with one of our clients, where the client say, yeah, well, it's correct because I analyzed it with AI. So as soon as it's done with AI, it's automatically correct. So I would doubt this, but it will get acceptance. Stronger and stronger. And but I still believe the human element, especially in this, if I look at a complex luxury property, for example, I still, you have the revenue management team, you have the sales team, you have the F&B team, you have the kitchen team, you have the rooms division manager. It's a network from C-level staff, so to say. Now there's a new solution to change the menu, to do a new layout in the restaurant, to change the F&B concept, whatsoever. Yes, it's maybe AI-backed, it's researched, it's nicely graphically displayed, but still you need a meeting, and you need to convince now the exec team as an asset manager. You need to have the discussion, and also you have to onboard them, to convince them that they are fully behind this idea. And I don't really see an avatar, shaking your hand or tapping you on the shoulder or saying, great meeting, now we're gonna go for it, great idea, let's implement it. I think this emotional element, this can only come from a human, and there will simply more time for this.
I agree. I was going to say not yet.
Yeah, not yet.
And so on. But I agree.
Yeah.
It's still a very big human industry, human to human industry. And I think we never need to forget this kind of thing, where the human element is still super duper important, because it's emotion, it's influence, it's communication. And that's something which yet AI cannot replace.
Yeah, absolutely.
So that's something which I believe will continue.
Yeah, absolutely.
Okay. And in terms of hotel concept, do you think like there are some concepts which are overhyped at the moment?
Yeah, I believe so. What always strikes me a bit, it's this serviced apartment boom.
Okay.
I recently read an article, I think until 2032 or 2030, the German market will have another 40 to 50,000 service apartments.
Okay.
Now I had recently also a good colleague of mine, Sven Küstermann from Numa. We recently had an event together. Corrected me and said like, no, it's not called service apartment anymore. It's called now limited service hotel. You know, because they also move away from fully equipping their every room with a kitchenette.
Yeah.
But what strikes me is markets like, let's call it C markets or B markets in France, Austria, Germany, where in the fifth row behind the railway station, you have the next serviced apartment or limited service paying an AAA location rent because the business, they are private equity backed and want to scale and want a big exit.
Yeah.
And these kind of lease levels really strike me because I can guarantee you these leases are not sustainable because the location, the brand might be great, you know, but the location does not support this strong demand. And I think technology concepts are great. Limited service hotels are great. It's a great add-on to the market, but not in every location.
Okay, interesting. And which hotel concept are you, in your opinion, underrated at the moment?
Underrated. Underrated. I'm not sure if a segment is really underrated right now. I would argue there's a lot of demand currently in, if you look at Austria, for example, or Europe-wide, at still mountainous Alpine locations where local families that run 30, 40, 50 room properties have a generation gap problem.
Big one, yeah.
And where you could basically really make an investment case out of it. We actually supported a couple of years ago the entire Gasteinertal, close to Salzburg, for a tourism master plan, where properties were identified where you could new build, or basically we spoke with or the local tourism region identified and spoke with local stakeholders and identified room for improvement, where you could basically move real estate together. So to create like from two family run properties, a property like for 100 rooms, and where we had like created an own agency where basically stakeholders could meet, like investors could meet brands, could meet local banks, and actually realize projects. So I think this local Alpine region, where you really have this boutique-ish experience with a local host, but maybe supported with technology. I think this is still a big gap that needs to be filled.
I agree. That's a big one, and as well you touch on something. You talk about the generational gap, where you have a lot of hotels which are mom and pop in the mountain or somewhere else, even pretty much everywhere, and then the generation, like the family, like the new generation, doesn't want to take over from the parents or the grandparents, and they don't have anyone to take over.
Exactly.
And that's a big issue at the moment.
And we spoke about CapEx earlier. The wrong CapEx investments were made. They kind of have overseen the boost in technology or these technology innovations. A lot of is still manually, and a couple of banks loans running. The local bank is really pressuring, so it's a bit of a trap where it's hard to get out. And I think this is would be a lot of beautiful investment cases. We've actually also consulted a couple of these customers where the local family basically sold, recovered from the debt, but is still running now the property. So it can also be a win-win situation. But I think also from a brand perspective, if you still look at this Alpine region, Western Austria, for example, there is massive potential for brands like for brands like Hilton, Marriott, Hyatt, to name them all, Accor, to also brand these spots.
I just have a small caveat to add to it, which is like the climate change. Because for example, like if you go to the mountain and the snow is great, and there's a lot of snow, until when? Or same the summer getting warmer and warmer. So you see it as an opportunity or as a risk? And again, I don't know, maybe that
Yeah.
tomorrow we're going to find a
Yeah.
cure to global warming. I hope so. And it will be fine. But you see what I mean?
Yeah,
As well.
but want to contradict you a bit here,
Yes, go ahead.
politely. That yes, the snowing zone
Yeah.
gets higher and higher and
Sure.
higher, absolutely. But we see a rise, especially during summer,
Yeah.
for this Alpine region because in Austria we had a word, it's called Sommerfrische, so basically like a summer refresh. It was a thing back in the 60s, 70s, 80s. And then globalization came. Everyone wanted to go to Thailand, to foreign places, but it's a bit of a return to the local. And we see, especially like a lot of mountainous region have realized the potential,
Yeah.
also during summer. And if you look at locations like Sölden in Austria or Bad Gastein, and you look at the overnights during summer peak, it's almost close to
Yeah, right.
winter.
It's true.
And so they have recognized mountain bike trails, all the activities what you could do, hiking.
Yeah.
It's amazing. It's I think it's also a trend. This nature loving, this being outdoors with your family. You know, we're
Okay.
so much behind screens. So yes, with skiing will turn, I think, to a complete luxury sport.
Yeah.
But I think the importance of the mountains, etc., will still have its validity also during summer or off seasons.
Yeah, no, I agree. That's a good point. And again, it brings us as well to our next point because it's currently in Vienna with a heat wave, and you see like with all those kind of heat waves becoming more and more frequent and intense across Europe. How should hotel owners think about climate resilience as an asset management topic? Like for example, we briefly touch about ESG. How important ESG is in this angle of global warming and heat wave and so on.
I mean, I think I dare to say that we have it doesn't matter if it's investor, operators, stakeholders, we have a big responsibility towards our generation, but also more importantly about our kids, next generation. And I mean, it's obviously returns, etc. is very, very important. But I have very often to, and I see it on a daily basis about business cases, super heavy IR driven, just flip it, don't really care about any environmental measures. And I think we need to have a bit of a rethinking shift. Otherwise, we're really getting into a dilemma as an entire society. And I think we have this obligation. And fortunately, I've recently spoken with someone from UBM or other in a regional family office we consult in Munich, a family office Knorr-Bremse. They have really understood that we need to do something. And yes, return for the investors is important, but we also have an obligation. I think this balance is really key to be able to travel somewhere where it doesn't get too hot. And we have at last IHF in Berlin, I spoke also with a big institution investor. They said they are not going to invest in the south of Spain anymore because it's a long-term investor because it's getting too hot. And I mean, this is crazy, if you think about it.
Yeah, but at the same time, you also have investors who only invest in ESG-friendly properties. And that's becoming like a critical factor to see if they're going to invest, put money, if banks are going to lend you money and so on. So the ESG is becoming very critical. And I was giving a class last week at École Hôtelière de Genève, and we touched on all those kind of certification or ESG initiatives. And to bring to your point as well, there's still an ROI on ESG initiatives. Because people can pay more. I think the data was showing like a plus 15 or 18% premium on the rate the moment you invest in ESG. Guests are actually is becoming a decisive factor when they choose a hotel to stay at. So there's some ROI on it as well.
Yeah, don't want to interrupt you on your own podcast, but I think this is a very crucial factor is the guest demand and the guest choice. And I'm really encouraging any brand to label it like truly and thoroughly and generally like to what is the actual CO2 footprint that overnight is generating, so that the guest has also, like we spoke about operators before, but also the brands are important here, that they have the transparency so that the guest can make an educated choice. And so absolutely important topic. Especially I think also EU-wide regulation.
Yeah.
This is the foundation. It's so complicated. Even if you speak with industry players, and people in the industry, it's really hard to see through, to understand. Also from a bank side, there needs to be a stronger push and to encourage more. Recently, we had a panel discussion, and there were the classical Austrian banks all present, and we asked them what would be the basically the interest premium, but in a positive way. So what would be my interest rate if I had two properties next to each other, same building structure, same operator, same brand, and one is super ESG friendly with a perfect operator, and one is basically old. And no one could tell me for this loan you would pay, I don't know, 50 basis point less, or what's actually the goodie.
Okay.
And this has to become way more transparent and way more encouraging. Otherwise, we see way too little investments into ESG and economically friendly buildings.
I agree. It's good. So to have more, to show some ROI, to have some case studies on this. And, I agree. So banks as well, who are sometimes the main decision maker, needs to understand as well ESG is not only a cost, it's also an investment with strong ROI.
Yeah, absolutely.
Interesting. And my last question before we jump into the lighting round, and it's more like because we went to school together.
Absolutely.
So as well, I know that we have a lot of new graduates coming into the hotel world and so on. And for someone joining in a hospitality consulting team today, like you, what skills or ways of thinking matter the most? Any advice as well you would give to new graduates?
Any advice? I think since we hired recently also two new colleagues, and I think especially in this heavy technology world we're living with, all these new AI tools and AI agents coming every day almost, I think this really critical thinking and being able to explain things in a very simple and short manner. So really passing on information. So you get so much information, from ChatGPT, Claude, statistic databases, but really being able to explain to a colleague, to explain to any peer or to your boss in a very few lines, very clearly what you have researched and what's the outcome of it. And I think this ability to communicate in a very simple and smooth way, I think is somehow the new gold, so to say, because you need to being able to untangle and extract information, pass it on quickly and clearly.
Interesting. I will add another one. I will say be very curious, embrace as well, like being with experts like you and the team, to embrace this kind of knowledge, to have this kind of education, on the spot. But be curious is very important to stay open on new trend, new innovation, what's going on and so on. Ask questions, and something like as well, new graduates sometimes they're a bit scared of, or sometimes not at all, but that's too extreme, to bring new ideas. To say okay, I see that you have done this. Why are you doing this? Maybe we should do differently.
Yeah, the questioning part. I for sure agree. I mean, it's a summary of a collection of different skills, but really questioning things. 100% agree is a very valuable skill to have, and I think still social and people skills, it's a different way how you communicate, are you empathic, etc., because I have the feeling that throughout this vast investments in technology and this rapid pace where we are developing, that this human connection element, I think there's also be a huge boom in the meeting industry, people meeting together, passing on information, and I think being able to humanly communicate in an empathic way, because with every person, I mean, you have your own company, you need to speak and communicate differently. You need to communicate differently with an investor, private equity driven, then you have an operator, then you have like a colleague. And so I think this communication and how you communicate in an empathic way is because you also want your message to be heard and, somehow adopted, and I think this is very important.
It's funny because we always go back to the same discussion, even on this podcast. We talk about tech, innovation, and so on, but it always come back to human skills.
Yeah, true.
Innovation, influence, communication, relationship, and that's all about human. That's beautiful. I like it. Cool. So let's go a quick lightning round. I give you like a very quick question, and you give a quick answer. Okay.
Absolutely.
Most overrated hotel KPI.
In this context of the modern industry, for sure, occupancy, because you can push it basically with hundreds of initiatives.
Okay. And the most underrated hotel KPI.
Is for sure GOP per available room due to the cost importance.
Okay. And what are the best signs of a strong operator?
Full transparency and willingness to adapt changes and being really eager.
Biggest red flag in a hotel due diligence?
Negative cash flow after rent.
Okay. Lease, franchise, HMA, or owner operator?
For me, HMA, perfect setup if you are hotel educated.
One hotel concept you would avoid? I think you touched on this already.
Service apartment in the 5th row behind a train station in Bremen.
Okay. And if you had 1 million to deploy into hotels tomorrow, what would you buy?
I would create an own a limited service apartment brand in Vienna or internationally with luxury apartments, technology based.
And what is one trend in hotel investment that most people still underestimate?
Yeah, we spoke about this environmental measures, ESG. Otherwise, we are thinking a big dilemma on the long term.
And one trend in hotel investment that is overhyped?
Overhyped is for sure F&B lifestyle concept, sharing concepts with very overpriced without any differentiating factor, I'd say.
And what will asset management look like in 2030?
Very human focused and AI being done almost exclusively. AI almost exclusively focusing on the analytical part.
Very nice. And my very last question, if you could put one message on a billboard for every hotel owner, operator, GM, and revenue manager to see, what would it say?
Be very curious and involve yourself with your own hotel, no matter if it's HMA or particularly if it's leased.
Okay, excellent. But for everyone listening, thank you so much for still being here. I think today was a very interesting conversation around those kind of offside on what hotel owners see that operator don't, and you can see as well a lot of synergies between the two and a lot of different trends and so on. Yeah, so very happy with the conversation today. I've learned as well a lot. If there was any jargon or any question that you have on anything that we talk about, let me know as well. I'm happy to answer any of your question. And the closing idea. What hotel owners see that operator don't?
Yes, also very good question. I think especially really this financial return profile investors really required to make their investors also happy and to reinvest, so we can also scale other further opportunities to be able to lease by operators again, because very often operators are so focused on the operational part, and I think the understanding of pure free cash flow needs to be adopted way better, I'd say.
Excellent. But for everyone listening, where can we find you, Philipp? Where is any resources, any website? What do you
Absolutely. You find us on our homepage. If you just type in Google MRP Hotels, you will find us directly. And also you can find me, you can write me a direct email at philipp.huterer@mrp-hotels.com, and I'm sure you link me down.
I will.
And if you have any hotel related questions, feel free to reach out. And it was a real pleasure having done my first podcast with you.
Well done. You did very well. But yeah, thanks so much, Philipp.
Thank you.
Thank you for everyone listening, and I see you next time.